world's temperature rises, the amount of money being invested to cool it is racking up. And investors are in a bidding war to secure their place in the green energy race. Their target right now, Tilt Renewables.
The industry found our platform quite attractive, and our largest shareholder decided in December last year that they would see if the market found us attractive enough for them to exit.
That shareholder is Infratil, and the market did find their holding attractive. AGL Energy, the Future Fund and Queensland Investment Corporation, known as Power, and Mercury in New Zealand became the successful bidder, offering $7.80 a share. Canadian pension fund CDPQ reportedly made a counter-offer, forcing the consortium to raise its bid, which is more than double what the shares were worth when Infratil first considered selling them.
Our passion is to change the electricity generation mix and look beyond the now.
Renewable energy infrastructure in Australia is still in its infancy. Tilt operates 8 wind farms, another one is under construction in Victoria, and a further 8 are in development. 4 solar farms and 2 battery storage facilities are also on the way.
There is a weight of shift across the world to renewable energy sources, right? And to do that, you've got to have a development pipeline. You've got to have the right priced equity to get into that development pipeline.
World leaders agree, with some setting new targets at a climate summit hosted by US President Joe Biden. But Scott Morrison refuses to set a timeline for when Australia will reach net zero emissions. And he says we'll get there by investing in technology, not taxing companies. Pressure from shareholders and society is building. Coal-fired power plants are shutting sooner than planned, and the calls for investment to curb carbon emissions is now reaching a crescendo.
I think it's a factor of the global momentum, the thematic. There's a secular trend behind decarbonisation, and a lot of companies are now not only focused on shareholder value, but all of stakeholder values.
Ben Squires is the Chief Investment Officer at NGS Super, an NGO industry super fund with almost $13 billion under management. It's switching all its investments to make the fund carbon neutral by 2030.
There'll be a lot of technology that will start to really ramp up in terms of decarbonising, particularly the materials sector and the energy sector.
And it's that technology and infrastructure that harnesses our natural elements, like the wind, colloquially known as the Fremantle Doctor, that blows through here and cools Perth on its hot summer afternoons, that's attracting big investment. Last year, Spanish group Iberdrola knocked out a Filipino conglomerate in the bidding war to buy one of Australia's largest renewable companies, Infigen, for almost $900 million. In 2019, industry super fund Rest took complete ownership of Western Australia's largest operational wind farm, Colgar. The building and construction super fund Cbus also owns wind and solar farms in WA through its stake in Bright Energy Investments. And Australian Super tried to buy Infratil for $51 billion. The offer was rejected, but it did lead to the bidding war now being played out for Tilt Renewables. More investment opportunities are on the way.
In Australia, we've seen a rapid uptake of solar, rooftop energy and projects like the one that we're standing at today.
Miranda Taylor heads up National Energy Resources Australia, a government-funded independent not-for-profit working to develop Australia's energy sector.
I think it is happening very rapidly, but I don't think there's any doubt that in the world of the future we're going to need to see significant more investment in renewable energy.
And that means the Tilt Renewables bidding war could be just the tip of the iceberg.